Hello everyone. There's a lot of global and domestic noise rattling the markets right now. Over the weekend, right after the Friday market shutdown in the US, Donald Trump announced a massive tariff on on EU and Mexico of around 30%, countries that together account for nearly two-thirds of US imports. While some of these believe that this move could shake global markets today, I think personally markets have discounted the worst of the tariffs 2 to 3 months back. But let's shift the lens to the Indian market. Indian market is in a different world altogether because we are not looking at the tariffs right now. What we are more concerned about here is the quarter two earnings. TCS companies like IT, TCS, a bellwether company, reported revenue growth of less than 2%, a shocker when you consider that we are projecting 6 to 7% of GDP. If you look at FMCG sector, Avenue supermarkets also saw revenue pressure, and this mismatch between the macro, which is the GDP, and the quarter two earnings of the companies, I mean, it's just not matching the reality and raising the eyebrows. The ones, at the times used to come when IT sector used to set the trend for the Indian markets, but now it's clearly struggling, possibly under pressure from the shift to the AI and automation. Growth is almost flat, not even growing 2 to 3%, and investor sentiment is cautious. Even consumer facing companies are showing partial recovery with demand still uneven, and a lot of consumer companies are poised to grow, a single digit or a double digit, to be honest. But ITs and FMCG companies are still showing a very slacked demand and even revenue growth. So while the market may have absorbed some global shocks, the real test lies in the micro, the earnings. Until and unless the earnings doesn't come, the stock is not going to move. And a lot of IT companies, they are showing the results, and they have, the revenue is growing around just 2 to 3%, and they are getting the P's of around 25-30%. If you are growing 2% and the P is given 25-30, I don't know, markets are somehow thinking that okay, the P is sustainable, but I don't think so. These companies even deserve to have a P of 20-25, of where the top line is just growing for around 2 to 3%. Thank you.